Hello, I'm Crypto Casey, and welcome to Last Week in Crypto. Every Sunday, we review the performance of the largest cryptocurrencies, top gainers, as well as the latest global news stories affecting the crypto markets this past week. This week's episode is brought to you by Crypto.com, an exchange with over 55 different cryptocurrencies you can buy with bank transfers, debit, or credit cards at true cost with no markups. Crypto.com also offers a Visa credit card you can use to access, manage, and spend your funds, all while earning cryptocurrency rewards. It's important to have relationships with multiple exchanges as a cryptocurrency investor, especially in the United States, where there are very limited on-ramps for trading US dollars for cryptocurrency. So if you use the link below to sign up for Crypto.com, you'll receive not $10 of free cryptocurrency, not $20, but a whopping $50 worth of cryptocurrency for free, all while supporting the channel. Check it out by scrolling down to the description area below and clicking on the link. Awesome! In this episode, we will talk about what happened in the market cap of decentralized applications on Ethereum, what's happening in the DeFi asset class, how institutional investors are absolutely flocking to crypto in droves, and what that means for the future value of the cryptocurrency market at large. To check out the links to all of the articles we discuss, go to cryptocasey.com/lastweekcrypto. So let's get started. Bitcoin's 7-day moving average was about negative 0.9% and Ethereum at negative 3.7% overall. And looking at the charts, it's just been steady, uneventful, sideways movement, staying between a narrow range of $9,100 and $9,300, which, although very unexciting, the price stability is a great sign that Bitcoin may have found its bottom price point, and also could be indicative of its decoupling from the traditional markets. The crypto markets are extremely hard to predict though, so we shall see after the US presidential election, because we all know Trump is doing everything within his power with the Fed's handy-dandy money printer to keep the stock market artificially propped up, at least until then. The top gainer this week was Aurora, up an insane 465%. And if I'm being completely honest, I had never heard of this coin before looking at the chart today. And none of the other crypto content creators or information sources that I follow have even brought this project up before, as far as I can remember. But that's crypto for you. Next top gainers include Elrond, which was a top gainer in our previous episode, is up 82%, Aave up 56%, followed by iExec up 51%. Nice. Touching on one of the top 10 gainers this week, in this article released Monday, the 13th, Chainlink was described as becoming the Tesla of cryptocurrency, hitting an all-time high of $8.40. How much higher can Link's price go? After breaking past $5, surging nearly 100% in a matter of days, Link surpassed EOS and CRO, claiming a spot among the top 10 cryptocurrencies in market cap, in addition to being a top gainer this week. And as Link is an ERC20 token built on the Ethereum network, it makes perfect sense that in another article released this week, the combined market cap of ERC20 tokens now surpasses that of Ethereum itself. So Ethereum-based tokens are now collectively valued at $33 billion, while Ethereum's market cap sits at around $27 billion. This is huge because the total value of the economy built on Ethereum is now more valuable than the entire actual Ethereum Foundation. An analogy that might help you wrap your head around things is imagine the Apple App Store, where companies and developers use Apple's programming protocols to build valuable product and service applications to then launch on Apple's App Store ecosystem. And to make this analogy more realistic, imagine the apps on the App Store can only exist on Apple's App Store and nowhere else, not in a browser, any other platform, or anywhere else. The app's entire existence is completely predicated on the existence of the Apple App Store, so they can't operate without it. With all of these variables in mind, imagine that all of the apps in Apple's App Store have a greater total market value than the very foundation on which those apps are built, the Apple App Store itself. That's kind of where Ethereum is right now. Ethereum is the Apple App Store, and all of the ERC20 tokens built on Ethereum are the apps. And they have more market value than Ethereum itself. Also, this doesn't even consider the Ethereum-based tokens like those using the ERC 721 standard, which account for millions of dollars on their own. So the gap is even wider. Why is it so? Well, let's explore an article that came out this week about the new class of crypto assets that will outperform Bitcoin and Ethereum in an emerging bull run, according to crypto analyst Luke Martin. The popular trader and head of Venture Coinist says he believes the emerging class of altcoins are just getting started, and mainstream investors remain unaware of the DeFi movement. And if you don't know what DeFi is, you can check out this video guide I just released explaining what DeFi on the Ethereum network is and its implications for the future of our global financial economy. He goes on to say you have things like Compound, which ripped to a $1 billion market cap, things like Lend, up almost 100 times, and Link, reaching all-time highs. Regardless of what Bitcoin or ETH or the rest of the crypto market does, right now, money is being allocated to these DeFi altcoins. It's been the best performing group, and he thinks it will continue to be. And I agree with him. Taking a look at the Q2 DeFi report that came out this week from ConsenSys, check out this interesting diagram that shows you how active people are in the space currently, despite how new and emergent DeFi is. This chart depicts all of the addresses as tiny dots that transacted within specific DeFi protocols, as well as the interactions between each DeFi protocol represented by lines. All in Q2 of this year, which make up just shy of 80,000 unique addresses. You can see the DeFi projects with the most users this past quarter were Uniswap and Kyber, which are both decentralized exchanges, followed by Compound, a money market lending protocol, as well as Augur, MakerDAO, Bancor, and Aave. I highly recommend checking out the whole report to really start to grasp the gravity of the DeFi space as far as adoption and the implications it has to revolutionize the future of our global financial system. So considering how the value of all Ethereum-based apps has eclipsed Ethereum's market cap, and if we take a look at how much Ether is locked into DeFi right now, which is a total of 3.5 million ETH, I think we can all agree that Ethereum is beating Bitcoin in more ways than one, which was the title of a Forbes article published Tuesday. It reads, Ethereum, the second most valuable cryptocurrency after Bitcoin, has almost doubled in value so far this year. And the number of active Ethereum addresses is growing at nearly twice the rate of Bitcoin's, up 118% since the beginning of the year, leaving Bitcoin's 49% increase in active addresses in the dust. Also, Ethereum's price is up almost 90% from its $130 price point at the start of January to around $240, while Bitcoin continues to try and fail at breaking through the $10,000 mark. Though Bitcoin's price has not been as exciting to watch this year, things have been heating up under the surface as Wall Street loses its fear of Bitcoin. Thursday, an article was published stating 2020 has marked a big shift in attitudes in cryptocurrency from Wall Street. And when it comes to the US dollar, the apocalyptic vibe has shaken the faith of the most faithful and turned the Bitcoin fearful into crypto fearless. Wall Street veteran Jenny Ta shares that more and more of her boomer friends are saying, let's pull money out of the bank, right? Because banks can shut down anytime and you can't go and withdraw your money. So they are beginning to feel digital currency is more effective. Mike Alfred, the CEO of crypto markets analytics company Digital Assets Data, says, another part of the appeal is getting in early on an emerging asset class, like internet stocks in the 90s. He agrees with Ta that a major catalyst for this shift is a loss of faith in the system, the printing of trillions of dollars, and people feeling that maybe their US dollars are not as safe as they thought. One of the big financial institutions at the forefront of Wall Street's participation in the cryptocurrency market is none other than Grayscale. And Grayscale's Q2 digital asset investment report was published this week, highlighting inflows of over $900 million in Q2 alone, with an average weekly investment of $57.8 million into their Bitcoin Trust account. Within the report, you can see some graphs analyzing Bitcoin's flow by comparing the amount of Bitcoin Grayscale is accumulating compared to the amount of newly minted Bitcoin entering into circulation. Since the halving event in May, Grayscale's demand for Bitcoin alone is higher than the supply of new Bitcoin entering circulation. The report concludes that it's difficult to ignore the empirical data signaling a shift in sentiment towards digital assets from individual and institutional investors alike. Pretty interesting stuff. So let's zoom out from DeFi and take a look at other news around the world. Cryptocurrency trading in India sees a 400% jump during COVID-19 lockdown despite lack of clarity on regulations and possible laws trying to ban cryptocurrency. Nishal Shetty, founder and CEO of Wazir X, an exchange catering to Indian cryptocurrency users, says, "The lockdown has been a major factor. People have more time to understand and learn new things. Also, a lot of people are looking for new avenues of making money online, as they don't have a job right now, or their jobs are offline and they can't go to work." And this is something very important to consider, as someone obviously interested in cryptocurrency, to some extent if you're watching this video. This is a new and emerging industry, teeming, absolutely overflowing with potential opportunities as an investor, developer, consultant, entrepreneur, etc. So if you are a beginner and interested in becoming a profitable cryptocurrency investor, I will be opening up limited access to a beta version of a course in a few weeks. And after I get feedback on it, I will be releasing a full-fledged flagship course for everyone so you can learn how to take advantage of all of these opportunities available in cryptocurrency. If you are interested in learning how to become a developer in the industry or learn more about the advanced technical concepts of blockchain technology, the best and pretty much only resource available to my knowledge is Ivan on Tech's Academy. Using the link in the description area below, you can enroll in the course at a discounted price. So if you're interested in getting more involved in this space, there are resources available. You just need to seize upon them. Otherwise, you may find yourself stuck and forced to do something like liquidate your retirement account to stay afloat. In fact, a story released by Thomson Reuters reveals, faced with COVID-19, the highest number of Australians have tapped their retirement funds since April. Australians asked to pull out more than 5 billion Australian dollars from their pension funds in the first week of July, the highest since the government granted early access to retirement savings to support a coronavirus hit economy. The figures take the total amount Australians have applied to withdraw to 23.3 billion Australian dollars. The government forecasted a total of 27 billion Australian dollars would be pulled from the world's third largest pension pool when it first revealed the scheme. Scary stuff. I have one last story to share with you from the other side of the world that will conclude this episode on a high note. After receiving a secret Bitcoin donation, El Zante, a small village in El Salvador, adopts Bitcoin as money. The donor partnered with a Michael Peterson, who was given the opportunity to administer the Bitcoin under one condition: he would not cash it out. Beneficiaries of the digital currency had to learn how to use Bitcoin itself, creating a Bitcoin economy. This was the birth of the Bitcoin Beach initiative. Bitcoin Beach set out to create a sustainable Bitcoin ecosystem where the majority of the residents are unbanked and the local businesses don't meet the requirements that would enable them to accept credit cards. This is an extremely interesting use case of Bitcoin. And if you check out the article, you can see that they are using Bitcoin to pay for food, utilities, hardware supplies, and more. But here are two quotes from local residents that really illustrate the bigger picture. Jorge Valenzuela shares, "It's great to see youth excited and dreaming about their futures in El Salvador and seeing a path forward here instead of thinking they need to go to the US. They are able to work, help support their families, and go to university. Bitcoin has helped me understand what money really is and has given me the resources to impact the lives around me." And Roman Centeno remarks, "It is amazing what is happening here in El Zante. We are preparing the kids of the future. They are used to it now. They can check their money on their cell phone. They are excited to save. This financial education is important. We never got that opportunity, and it's incredible the opportunities children have now. It makes them believe that there is a future in El Salvador, that they don't have to leave and go somewhere else to succeed. Our kids start dreaming again. They have the time to be kids, to swim, and to play. Bitcoin gives them freedom." Awesome. Before we conclude, I wanted to make a PSA regarding the Twitter hack that happened this week. In case you didn't hear, big Twitter accounts like Bill Gates and Elon Musk were hacked, with messages tweeted requesting followers to send Bitcoin to a Bitcoin address in order to receive twice as much Bitcoin in return. We are seeing similar scams everywhere, including even on YouTube ads, which is just terrible. So please do not ever send cryptocurrency or any funds to someone that claims they will send you more in return. Also, do not ever trust someone who claims to be a trader or broker in this space, who offers to take your funds and generate profits for you. All of those are 100% scams, so be careful out there and always think twice before considering sending someone you don't know cryptocurrency. Cool. Well, that was Last Week in Crypto with me, Crypto Casey. To check out the links to all of the articles we discussed, go to cryptocasey.com/lastweekcrypto. So what did you think of the stories we covered? Did you find this video helpful or entertaining? Are you going to miss out on $50 worth of free cryptocurrency by signing up for Crypto.com? If not, click on the link to Crypto.com in the description area below. Also, let me know your thoughts in the comments below. Be safe out there.